Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index edged slightly higher last week, but remains under the 98 mark. Persistent price pressure highlights the Federal Reserve's challenge of cutting rates against a backdrop of a weaker labour market. July's core PCE rose 0.3%, up 2.9% year on year, the fastest pace since February. Fed Governor Waller voiced support for a September rate cut, with more cuts possible in the coming months if jobs remain weak. WTI crude traded in a narrow range last week between $62.80 and $64.95 a barrel, under pressure from oversupply concerns and US action against India's imports of discounted Russian oil. Washington raised tariffs on many Indian imports to 50%, a move effective Wednesday, intensifying worries about supply dynamics. Traders are watching closely to see how India responds to US pressure. Gold surged past $3,400 last week, hitting $3,454, its highest level in a month. The rally, set for a second straight weekly gain, is being fueled by dollar weakness and safe haven demand. With US monetary policy uncertainty growing, investors continue to flock to gold. Political pressure on the Fed to accelerate rate cuts has lifted sentiment, with markets broadly expecting a 25 basis point cut in September. The dollar-yen pair moved in a tight band last week, trading between 148.18 and 146.76, extending nearly 4 weeks of sideways action. July data showed industrial output and retail sales falling short of expectations, while Tokyo's core inflation stayed above the Bank of Japan's 2% target. Unemployment slipped to 2.3%, underscoring a strong labour market. BOJ Governor Ueda signalled expectations of further wage growth as labour conditions tighten, raising prospects of another rate hike. The euro settled near 1.168 heading into the weekend, weighed down after the July US PCE inflation report broadly met expectations. The euro has climbed about 11% this year, supported by EU stimulus measures and uncertainty over US fiscal policy. Still, inflation trends across Europe are mixed. Germany's rate picked up above 2%, while France, Italy and Spain undershot forecasts. Futures markets suggest the ECB may cut rates modestly this year.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.